Welcome back. After many quarters of weakness, one of the better performers this year in the consumer space has been Bajaj Consumer. The management joins us on the show. A strong set of second quarter numbers boosted further by Vishal Personal Care's acquisition, cross margins expanding. Naveen Pandey, the managing director of the company who took over in July 2025 itself, joins in for his first ever conversation post taking over at Bajaj Consumer. Remember, before this, he was at Unibic, and for that, for 5 years at Marico as well. Naveen, thank you so much for joining in and taking some questions. It was a good performance that came in, and this despite, the transition issues that we saw around GST, etc. Now that it's been a little around 2 quarters of you joining the company, the first obvious question is what was, given to you as your key targets, and what is your strategy to achieve those targets?
So, Nindlam, I think we've been a strong company historically, but we've gone through a longish bout of underperformance and weakness. And the key task which I have is to really kind of, take this forward back to the glory days. And what that means is to get back into strong double-digit growths consistently quarter after quarter, and to get to, respectable industry standard of EBITDA margins, where again, we had slipped back significantly. And that's what we're going to focus on and, try and deliver. So from that lens, while the quarter which we have just concluded was a good quarter from a trend perspective, but we're still short of where we want to be, and our endeavor would be to consistently work towards that.
Could you give us some more quantifiable details? Double-digit revenue growth, you're speaking about historical levels of margins, respectable level of margins. Could you give us a sense? And also, to get this growth, your underlying category is not which is flying off the shelves, right? The category itself is stagnant. So are you looking at other categories? Are you looking at acquisitions? If you could detail your strategy a little more.
Sure. So first of all, quantifying what it means is, so what I mean is that over the next 4 to 5 year period, we would attempt to get into a double-digit kind of growth CAGR. And when I'm saying margins, basically, if you look at our CPG industry, we work in operating margins or EBITDA margins, which are in the 20s, low to mid 20s, and that's the zone where people operate. And when I started the journey, we were in the teens and low teens, low to mid teens. So I think there's a journey on both margin and there is a journey on growth, which we are attempting. That's more from a quantification of where we aspire to be. Now, how we are going to get there is not very complex. It is 3 or 4 key bets for us. The first and the most important is our key brand, the name on the door, Almond Drop Hair Oil. We need to invest, reinvigorate that brand into growth. We have a give or take 8% market share in the overall category, and there is a lot of headroom available. It is the most premium oil for over 2 decades, and I guess in the interim, we had not done as much investment behind the brand as we need. We've started doing that, and we are seeing very good early results, and I believe that itself will be a first leg of our transformation. The second leg would be identifying new pillars of growth in terms of the new categories which can become salient for us in the time to come. They would include things like coconut, which we've already done. They would include our acquisition of Banjaras and a few more, products and categories which will come in to add that. And third pillar would be around margin expansion, creating a sustainable, healthy operating margin, which we deliver quarter on quarter. And, then the right foundation around people, processes, capabilities which are required to deliver the 1, 2, and 3. So I guess that's a simple playbook which, I'll be working on.
Sure. Naveen, you said 20% margins in the next 4 to 5 years, but you're already at 18% Q2. But FY26, FY27, where do we see that headed? At least 18% is what you could maintain maybe in FY26.
See, we don't give guidances as a principle, so I would avoid calling out the next quarter or the balance of the year. But yes, our movement from around 14 to where we are today has been rapid, and that is because some of the lower lying fruits are easy to achieve. And going forward, it's going to be a slower build in terms of another 300 to 400 basis points, which we would attempt to achieve, and that will happen slowly, gradually over a period of several quarters. It won't happen very, very quickly, in a very short term.
But that investment also, you said, right? You're increasing in terms of ADHO. So then do we have to factor that in as well in terms of margins?
No, I think we will deliver the margins after those investments. Investments is also a question of how we are choosing to spend money. We've always been a high A2S organization. However, not every advertising spend really gives you great ROI. We are choosing our spends wisely, and that allows us to deliver disproportionate results. So what we've declared in the past quarter is our spends on ADHO is more than 50% up, while the overall advertising has gone up by around close to 200 basis points. But the spends on the main brand is very, very significantly up.
All right. One of the ways you can also increase your growth is by increasing distribution and penetration. You've spoken about Project Arohan. If you could give us a sense on the metrics that you are tracking out here and what could the additional scalability in your business be because of Project Arohan and the Vishal acquisition itself. Banjaras, what kind of scale are you looking at here?
First part on Arohan, what we're doing, Mangalam, is very simply we are adding to our quality and quantity of reach. We are focusing on direct reach addition, both in the urban and in the rural areas. We started with a few priority states and we are expanding it now to cover more than 80 to 90% of our business over a period of time. Urban results have already started flowing in. We expect to add roughly 8 to 10% of our direct reach every year for the next successive 3 to 4 years. As part of this exercise. Rural would be a similar task, but rural we have started a bit later, and I think it will take a couple of quarters for us to stabilize and then get back into the positive cycle on delta addition. When it comes to Banjaras, we acquired the company, which was give or take around 50 crores last year in terms of revenue. I think we can look at not a CAGR, but a multitude of X factor of growth of this brand. This brand operates only in certain markets. It does not operate into modern trade and e-commerce, does not operate into our core markets of the Hindi-speaking belt. And hence, there's a lot of scalability of this business. Our immediate effort is to really consolidate and assimilate the brand and really get the teams to work together. And as and when that happens, we will subsequently scale it up across channels and geographies.
But any further acquisitions that you would be looking at, and what would the what would your kitty be right now in order to explore that?
So we have a sizable war chest. We are also a debt-free company, which allows us to really raise debt as and when needed, and hence that gives us a fairly good acquisition to kind and go ahead and acquire brands in the market. What's going to be a more constraint than money is finding brands which have a great fit to us. And hence, in the medium term, we'll be lookout for more acquisition opportunities as and when they come to really bolster up our basic growth.
Would it be a similar size to what you've already acquired, around 120 odd crores?
This has been towards the smaller size. We are very happy to look at larger size acquisitions as well. But I think it's more about the quality and the fit rather than the size which will dictate our decision.
And do you have any target on how much should come in from ADHO and how much should come in from the others? This one quickly. And also, will you stay in this category or are you exploring other categories as well?
So, Mangi, our belief is that we can get ADHO to grow mid to high single-digit revenue, on a consistent medium-term period. And, the other portion of the portfolio should grow a healthy double-digit, to push up the overall numbers into double-digit. And that is the core algorithm. And we would really look at acquisition being a top-up.
Okay. All right. We're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Bajaj Consumer targeting double-digit revenue CAGR going forward and looking at possible acquisitions. Will be investing in their famous Almond Drops brand going forward, which they have 8% share in currently. We'll take a short break, but up next, we're going to be connecting with UBS's Chief India Economist, Tanvi Gupta Jain, and we also will be talking to Rohit Arora, Head of Asia Forex and Rate Strategy. Stay tuned for that.